please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Share purchase and business transaction agreement.
It is 10,770, 772 that the Nifty has opened. That's 32 points higher.
I think you're going to see still better earnings as we go forward over the next 12 months. And that is really what is going to underpin the market.
I think we are good for something like 1,65,000 units per month, at least for the first 3 months.
I remain positive. The growth will be significantly better than what we had in FY18.
What the industry has been asking for is 55 rupees per ton as in sense of cane prices. So that, I believe, is what we would have got.
Bit of outperformance coming in from the Sensex compared to the Nifty, but the Midcap index continues with about a 0.5% cut.
So you've got casualties like Century Textiles down about 9.5%. You've got stocks like Quality losing about 6%. A lot of the metal stocks beyond the Nifty 50 have been weak.
All right, profit booking and a global risk-off sentiment ahead of the US Fed's decision kept markets in volatile but in a tight range. Sensex and the Nifty end flat, mid-caps take it on the chin. The index sheds over 1.5%.
Kotak Mahindra Bank rallies nearly 4% as it keeps the Bank Nifty in the green. Brokerages waved a thumbs up to the bank's fourth quarter performance.
Auto companies see profit taking after posting solid sales growth in the fourth quarter. Hero MotoCorp marginally misses estimates with its fourth quarter earnings.
Fortis Healthcare rallies over 4% after Malaysia's IHH and Munjal Bermans combine sweeten their offers to buy the company. On the other hand, HCL Tech slides over 5% after its growth guidance fell way below expectations.
And aviation stocks slide as fuel cost for airlines increases. Indigo separately disappoints in the fourth quarter. Profits drop 73%. Separately, Marico stock slides over 4% after a disappointing set of fourth quarter earnings. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you all about 8 hours of trading in the markets in just 5 headlines. Today was a particularly volatile trading, dotted by a lot of results, and some of them not too good, some of them extraordinary. We'll tell you all about that. I'm Lata Venkatesh, and with me is Ekta Batra. Hi.
Hi, Lata. Well, over the next 30 minutes, we will definitely be discussing those top 5 market headlines, and our experts will be answering your stock queries. Joining us now to answer all of your stock queries is our market expert, Gaurang Shah, and technical expert, Rahul Mohinder. Thanks, gentlemen, for joining in this evening. But before we get to you all, Lata, it turned out to be a session where the Nifty and the Sensex consolidated, but the mid-caps severely underperformed.
If one is looking for global cues, you're getting cues of caution, but you didn't get any cues of any severe risk-off. You will notice that the Asian market started off with a little bit of caution. We didn't see too much of green on the Asian screen, and that was because the dollar was strong. That's always a little bit of risk-off. And ahead of the US Fed meeting outcome, one thought that caution was explicable. But Europe actually has done very well. So it's not really global caution. It is only Asian stocks that were slightly under the weather, flat actually, not falling, which is why the fall in the mid-cap stocks today was kind of hit you out of the blue. It's a very severe fall that we have seen, and we have seen it practically across the board. A whole host of metal stocks, textile stocks, the traditional weak ones, you know, the Vakrangis and the PC jewelers. The entire set of stocks, mid-cap IT stocks also saw a bit of weakness, and of course airline stocks for specific reasons. So there was an across-the-board weakness clearly in the mid-cap stocks.
Okay, well, in terms of other stocks or how exactly the stocks panned out, just to reiterate, there was a lot of interest which came in a couple of these private financials. So Kotak was the top gain on the Nifty. Certainly. The other stocks included HDFC Bank, Axis Bank, all of them showing some amount of momentum. Result reactions included something like HCL Tech as well as Hero MotoCorp from the Nifty space. And consumption seemed to do okay from at least the Nifty space. We had ITC and Asian Paints which managed to go home in the the green. Vedanta, Tata Steel, a lot of the metal stocks were sluggish today. And from the broader markets, it was all about a lot of these high beta stocks. So PC Jewelers was down and out. Repco Home Finance saw a steep decline of over 8%. Just Dial was down 7%. Jet Airways declined. And Marico was weak post numbers as well.
Okay, well, actually, Marico had a reason. Well, the buzz in the market, and totally unconfirmed, is that some NBFC had to pull out some of its money because a client lost heavily, probably on a PC jeweler or on a Vakrangi, and that led to a little bit of a domino effect. But even then, this was quite a serious fall. The Nifty, however, has escaped with minor bruises, as Ekta pointed out, largely rescued by the private sector banks. Kotak, HDFC Bank and Axis Bank helped both the Nifty Bank and the Nifty kind of escape with just a flat performance. But let's ask our market experts what they have made of the day that was and the week that will be. Rahul, that question to you actually. The Nifty met with only minor resistance. It's down just about 20 points from Monday's levels, but rather severe beating in the mid-cap. What should we make of this? Can there be still further gains for the better part of for the rest of the month or the week, or do you think we are coming into some severe resistance even for the Nifty?
Good afternoon. I think, Lata, first of all, we have to take cognizance of the fact that the Nifty's had this straight line run up virtually for over a month. Now, that also points to one fact that we could always see a correction, and that correction could even mean 100 or 150 points, which would still be called a correction technically speaking. However, there are no signs of that yet, but I wouldn't rule out the possibility. What would worry me is the big issue. I think 10,600 is holding nice and steady. If we don't break down that level, I don't think one needs to get into a stage of reassessment from a Nifty point of view. Now, coming to mid-caps, it's going to be very stock specific. Even for that matter, within the Nifty, one can see a lot of underperformance and outperformance. I think it's a market where it's very demanding that we as traders look at the right stocks or position ourselves with the right levels. So it's more stock specific and hard to generalize. But on the Nifty, nothing really alarming here. I wouldn't really worry at this stage. I think it's too early to tell that is this some kind of a minor top in place.
Okay, well, thanks Rahul for that. Let's get to our second headline of the day now. It is Kotak Mahindra Bank, which rallied close to around 4 to 5% This was on the back of earnings cheer by brokerages. So Nomura has upgraded the stock to a buy rating, raised the target to 1,400 rupees, while CLSA has maintained an outperform rating on the stock. Kotak also pulled up the Bank Nifty, which ended the day absolutely flat in what was an otherwise weak market.
Okay, well, with that preface, let's get to the first question of the day. Amanullah has tweeted to us. Actually, it's Amanullah687. That's the Twitter handle. And he's tweeted to us that he has 1,000 shares of Kotak Mahindra Bank, which he bought at 327 rupees a share. He also has 600 shares of ICICI Bank, which he bought at 210 rupees a piece. He wants to know if he should book profits in either of them or hold the stock. Well, I have to come to you on this, Gaurang. First, Kotak. I mean, that was actually the toast of the day today. Do you think he should stay on?
Thank you, Lata, and good evening to you and all. Well, not unless he's in need of money, point number one. Point number two, if he's got only these two stocks in his portfolio, we don't know of that. But just these two stocks in the portfolio, then probably book part profits and, you know, increase your allocation to other stocks as a portfolio. If you don't want to do any of this, as a disclosure, we maintain a positive view on Kotak Bank as well as ICICI Bank. And my sense is, Lata, that both ICICI and Axis, the way Axis has done, met with the asset problem head on. I think similar will be the approach which we will see as ICICI Bank's number unfold. This is my guess. And that will possibly put in a lot of question marks in, you know, right place and will resolve the issue. So unless and until you want to do either of this, you are quite well safe, deep in the money as far as Kotak Bank is concerned. And ICICI Bank also should see the light of the day soon.
Okay, all right. So, Rahul, what would your view be on both Kotak as well as a couple of the other private banks, and what exactly would your pecking order be as well?
See, what it sounds like is clearly that the investor is more long-term oriented. And if one looks at, you know, the weekly charts and we look at horizons beyond 6 to 8 months, I tend to totally agree with Gaurang. There's no reason to kind of rush in and move out of these stocks. Both are very positive stocks. But yes, if you're looking at near term, if that's going to worry you in any respect, ICICI, if it breaks 275, we might see a bit of a breakdown. But again, would that be a reason to push out an investment? No, I think at these levels, the stock's already well corrected. I won't worry too much. Kotak, again, here too, I would kind of look at short-term pressures could come in at any point. Clearly, when you look at the volumes and the fact that you've hit a life high virtually, and you know, there's always this possibility of intraday corrections or sharp short-term corrections, which could mean 7 to 8% kind of corrections. But all of this should not worry one on the bigger picture. I would not in any way say that Kotak, even at the present levels, is not worth holding on to. I'd definitely tell him to hang in, keep 275 as a short-term stop if that's the short-term is really going to worry on ICICI.
Okay, well, actually, Kotak did have a very good day today, up 3.7%. And of course, the investors sitting on a lot of cash. The third headline of the day today obviously have to be auto companies. They were in focus because they reported auto sales numbers for the month of April, while Tata Motors and Maruti came out with a stellar show. Ashok Leyland disappointed after it reported its lowest sales since July. Sonia Shenoy first with all the details.
Well, auto sales for the industry were pretty good in the month of April, but the aberration this time around was Ashok Leyland. The numbers are not only below street estimates, they are much below what the company has done over the last many months. This time, Ashok Leyland sold just 12,677 units versus an average of around 19 to 22,000 over the last many months. Now, we don't know the reason for it. It could be capacity constraints, it could be, seasonality, etc. But these numbers are the lowest since July 2017, and that's the reason the stock is under pressure. This despite the industry doing quite well this month. Talking about the industry, very good numbers coming in from Maruti and Tata Motors. Those were the stars this month. Record high sales for Maruti. Tata Motors saw the MHCV sales rise 370%, which is the medium and heavy commercial vehicles. The others were also pretty good. So Eicher Motors, M&M reported good sales. Royal Enfield was up 27%. M&M's tractor sales grew about 18%. For TVS Motor, it was slightly below what the street was estimating. Hence, there's profit taking on the stock, but this 24% is growth that TVS posted is not something to complain about. Bajaj Auto saw its highest sales since September 2017. The trend was very good because export sales have picked up. You also saw three-wheeler sales improve, and the management has been quite confident as well.
Okay, Sonia, well, that's on auto sales, but Hero MotoCorp reported numbers, and it was another stock in focus, especially on account of its margins. Tell us more.
Okay. Well, I think we'll get back to Sonia in just a bit. It was a strong volume growth in Hero MotoCorp as well, about 20% year-on-year basis, and the stock ended the day in the red after it saw some profit booking. Okay, let's get to some Q&A. Manish Agarwal has joined us. Okay, Manish Agarwal has tweeted to us. He has 100 shares of Hero MotoCorp, which he bought at 3,860 rupees a piece. He wants to know what the 1 month target for the stock, as well as the prospect for the stock is from a slightly longer term perspective, 1 year. In fact, he says 1 to 2 years. Rahul, I think you're the person who has to help him first with the 1 month perspective.
I'm in fact a slightly negative on Hero Motor, more because of the fact, since the investors looking at a very short-term horizon, we have tremendous resistance around that 3,800 mark. I mean, we've seen this over the last 6-8 months. We've kind of moved to 3,750 to 3,850, and we've just rotated around. So if the worry is the immediate 1 month, I would say I would exit the stock. I think 3,500, 3,550, that would be my near-term target. If your horizons are going to be longer term, as he mentioned, he wants to look at it even for a 1 year horizon. I am not particularly positive in terms of a percentage yield or a rate of return model, but I think definitely you may see levels of 3750 to 3800 where we land up. So nothing extremely robust that I see immediately as of now. I think within the sector, if you're looking at a percentage yield and you're willing to put on some kind of a risk, I would use a further dip in something like Tata Motors to enter with that 1 year perspective.
Okay, well, let's get in another query now. We have another query from Prasad, who's tweeted asking about Eicher Motors. He bought shares for 19,000 rupees a piece and he has not mentioned how many though. He's asking, is it time to exit? He describes himself as a long-term investor. So Gaurang, what would you be recommending?
So Ekta, if you're a long-term, I don't think you should be in any hurry to drive your motorcycle out of the investment. I'll put it that way.
Okay.
And to be very honest, I have been, as a brokerage house, we've been extremely positive. And the recently launched 650cc motorcycle in form of Interceptor and Continental GT, my guess is that this particular motorcycle 650cc is going to have a huge crowd attraction because of the pricing, first of all, sub 3,50,000. And secondly, I think more and more people are now getting onto the higher end of the motorbike. Not that Royal Enfield manufactures any lower end bike, 350cc, 500cc and now 650cc. And equally robust is their commercial vehicle business. And demonetization did not have any impact on this particular company because there was waiting period of anything between 3 to 6 months depending upon what model of motorcycle you want to buy. So stay put. I think 31 to 32,000 is the near-term target, but definitely with the demand coming up, we will revise it upwards. And more importantly, their Chennai facility will start contributing to a great extent. That's a new facility.
Okay, with that, let's try and squeeze in one more question because the auto stocks were so much the focus of the market today. This question comes from Bhargav, and I don't think it is RC Bhargava. This is a question on Maruti. He has 10 shares of Maruti, Bhargav says, purchased at 9,300 rupees, and he's asking for an outlook for the next 6 months. I can understand him being worried since the stock has moved away, and today, even after a very good April sales number. Rahul, 6-month view for someone who is stuck with, I think, at 9,300 purchase.
See, I won't say that I'm extremely positive on it because of the fact that if you look at the move down we've had last week, has broken certain key averages, has broken certain support levels. At the same time, what's approaching? Let's look at 8,600. You know, that's again a good support. 8,550 to 8,600. We held on to that support back in March, back in Feb, and you know that could prove as a bouncing point once again. Is my view really positive on Maruti given a 6-month horizon? Yes, I would use a drop to buy. I wouldn't probably time it at the current levels. So if you're willing to kind of go through a bit of a seesaw ride, I am quite comfortable latching on with that target of about 9,500 to 9,700.
Still tuned into markets today, talk back. But let's get to our fourth headline of this evening. It's a tale of two stocks for Fortis as well as HCL Tech. Fortis Healthcare was up by more than 4% after both IHH and Munjal Bermans have sweetened the Fortis offer. On the other hand, HCL Tech dropped almost 5% after it reported its fourth quarter earnings. While the profit and revenue are in line with the street expectations, the company's FY19 guidance was really what was a disappointment.
Okay, well, in any case, HCL Tech, the stock has ended, as you can see, 5% lower. So, street not pretty impressed with either the sales number or the guidance. Ashutosh Nambiar has SMS'd us his question on HCL Tech. He says he has bought those shares at 438 rupees a piece. He's not mentioned how many shares though. He says he's been holding them for more than 7 years and he's asking if he should hold or sell. Gaurang?
So Lata, I think last 2 years were painful for most of those investors who got into IT. But we remain positive then, we remain positive now. And I think there's a major turnaround that's happening and we've seen a lot of positive coverage as far as the Indian IT companies are concerned. HCL Tech happens to be in our coverage. Our targets are somewhere close to about 1,080 to 1,100. At that level, I think you can possibly revisit your investment in case if you want to book out.
Okay, so stay put in HCL Tech. Today it's dropped, but it's in a good sector. That's the advice. The next SMS.
Yeah, we have Navtej Duggal, who has 850 shares of Fortis, which he's bought at 153. He's a short-term investor and has been holding the shares for 4 days itself. He's asking if he should sell or hold. Well, Rahul, what would you recommend? I think a lot of people share the same pain that he does.
I'm sorry, I couldn't hear the stock that he holds.
Fortis.
Okay, Fortis. You know, I think given the current scenario, I would largely expect near-term movements to be sideways. But the way I'd like to approach it is keep a stop loss at 130. Whatever one does, if one's holding on to this stock, there's not a lot that I would expect out of it, but keeping 130 stop loss, I don't think it should be a problem long haul to kind of move to levels of 180, 190. So at the current levels, definitely should be on your hold list. Keep that 130 stop loss. Immediate expectations, as I said, could be about 180, 85.
Okay, so there is from 153 a sizable reward he can take if he keeps that stop loss. Okay, finally, the last headline of the day, and that's a whole host of stocks from airlines to FMCG that were in focus. First, airline stocks tanked in trade because aviation turbine fuel prices have been increased to over 65,000 rupees per kiloliter. And in the cement space, Ultratech Cement and Dalmia Bharat fell in trade as a bidding war has erupted for Binani Cements, and that bidding war is heating up now with the NCLT asking both companies to increase or match their bids with each other. And finally, Marico fell in trade after the company reported a weak set of fourth quarter earnings, disappointing the street on practically all parameters, margins, revenues and profit. So now questions.
Yes, absolutely. Well, we have Twitter user Srinidhi, who has 200 shares of Indigo, which he's bought at 11.90 a piece. He wants to know if he should hold, sell or add more. He's a long-term investor. Well, Gaurang, Indigo will be reacting to what is a disappointing set of numbers tomorrow as well. What would you recommend?
So I think one should not get disheartened, first of all. And let me give a disclosure, Ekta. We remained positive during the IPO. Post-IPO, we have a standalone buy recommendation. Targets are, I think, 1450 to 1500. Aditya Ghosh going out, grounding of more than a dozen aircraft in form of Neo 320 and ATF expenses moving up with squeeze in Forex, etc. I think a negative reaction could possibly see tomorrow when the stock opens, but I think that should be the floor. The next in command and of course business strategy would throw in positivity, and not to forget it, one of the best low-cost operating airlines in India. So I would recommend a hold.
Okay. So, well, thank you very much, Gaurang and Rahul, for staying on with us and answering all the questions of our viewers. The view on Indigo, keep the faith. This is a one-quarter problem because of whatever engine issues and therefore grounded flights.